Welcome to NREI's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at NREIonline.com. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. David, how are you today?
I'm doing all right. How are you this week?
Doing fantastic. We are using the new name. I know this is like the second week. We've got this new name called the Common Area. I love it.
That's right.
I love it. And we're covering stories again. Last week we did you went over a research article, if I'm not mistaken. And today we're back to the news, correct?
That's right. Yeah. Last week we talked about our annual seniors housing research and gave that a deep dive. This week, going back to headlines. So some highlights coming back from the Labor Day weekend and what we've been up to this week, what's been happening in the industry. So there's four pieces that we're going to kind of talk about during the podcast, and then there's a few headlines at the end that I'm going to try to point people to.
All right.
So we got a piece that's centered on a new study that showed how college football, the success of a college football program actually translates to student housing investment. Then a couple of pieces just based on an update on what's going on with some HUD reforms and how it relates to affordable seniors housing projects, and then another piece about affordable housing. Actually, but in this case, it's a little look at some recent deals and how some big investors have made some headway into buying that kind of property. And then lastly, I'm going to talk a little bit about a study that we wrote about this week that looks at how, based on demographic trends, single women will become a bigger demographic and a more important demographic for retailers in the next 10 or 15 years.
Wow. All right. So the last article is all the single ladies. Oh, okay. I should probably stop right there, right? Okay. So the last article I'll look forward to. I'm married and I don't need single ladies, but I'm really curious about how that demographic is going to impact things. So we're starting with football, right?
Yeah, that's right.
All right. Go for it.
So I mean, the season kicked off. I guess that was a good time for CBRE, one of the big brokerage firms, put out this study that actually, I think was pretty interesting finding. Although I think the more that I thought about it, I guess it does make sense. But that if you have a successful football team at your school, it actually eventually translates into more successful student housing projects and more profitable student housing projects, because of the way that a college, having a success in college football ends up being a draw for enrollment.
Absolutely, yeah. Yeah, they're crazy here in Nebraska because there are no pro teams here. They've got the Cornhuskers, and they're nuts. I'm sorry, I'm a transplant. I'm usually with pro teams, but the college team atmosphere here is on fire. It's fun, but at the same time, they're a little psychotic. I'll just be honest.
Yeah,
so
absolutely. And Nebraska is a good example. I don't know if we mentioned them specifically in the article, but they are in what one of the distinctions the report talked about is that even the schools specifically from the Power 5 conferences, which would include the Big 10, the Big 12, Pac-12, ACC, and the SEC, of course. How can I forget the SEC? The schools from those 5 conferences, in particular, the student housing properties tied to those universities have the lowest cap rates of any student housing projects in the country.
Yeah.
So, like I said, I think college athletics, but in particular, I guess college football is such a huge media draw, helps drive enrollment. And more students means more opportunities for student housing. It means more opportunity for the student housing that's built off campus. That's the kind of stuff that's that we're talking about people investing in. I think specifically what they found is that student housing acquisitions, specifically at the Power 5 schools, had an average cap rate of 5.4%, and that's 43 basis points below the cap rates on assets that are near non-Division I schools.
Now, when you're talking student housing specifically, are you talking about larger buildings like people are building apartments, or are we talking homes that are being built or just bought and converted for student housing and those types of investment? What size are we looking at here?
We're talking more about the former, where not necessarily just not like the mom and pops that are renting the houses, but no, the rise in recent years of national, either regional or national operators coming in, building essentially upscale apartment buildings that are then for students, and generally the only one of the differences that you'll have in a student housing apartment from a more traditional regular apartment building is there's a huge focus on amenities. So a lot of times it's just, the Wi-Fi is just infrastructure is just incorporated into the building itself. It's not a service that the students even have to buy on their own. It's just part of their lease. And it could be also, computer labs, workout facilities, even pools at some of the nicer ones, a lot of common area situations for people to hang out in the building. And so there's just been a market. I mean, I know that when I went to school about a little over 20 years ago, graduated, these kind of projects were not the kind of thing that I would have associated with student housing, but there's been a real shift. And especially I think, again, at near bigger universities, near the most prestigious universities, where you have, frankly, students who also may, have a lot of income, who could afford nicer apartments, where these kind of properties are being built.
Yeah, I'm curious about the cost to a student for being in a place like this compared to living on campus in the apartments, dorms, whatever you want to call them. Currently, what those prices are, because I know that those prices have gone up quite a bit for students to live on campus, and if they're finding that they can get more for the same amount of money, or maybe a little bit less, or maybe a little bit more, but I don't know those stats. Do you have any idea how it compares?
I think for the nicest projects, they're definitely more expensive than the student housing would be. But like I said, that what comes with that is all these kind of amenities, that it makes it a pretty nice place to live. So it is certainly targeting a specific demographic of student on some of the projects. I don't think not all of them are high end, and I think that there are ones that are probably more comparable. I think there's one of the considerations that I think that often comes into play. Well, I think some other situations arise too, where in some cases, universities have actually partnered with developers to do this instead of dorms. So just kind of outsource the student housing portion, and maybe don't even have the same number of dorm rooms anymore. And they just have sort of a preferred partner who is getting better proximity to the campus to build these projects.
Got it. That makes sense.
So that may happen. And then that is also, I think, and that last part is also a consideration that I think often comes into play for students when they're making these kind of selections, is how close to the campus can you build one of these things? Because people, being able to get back and forth is essential, obviously.
Yeah. Pay a little bit more to live really close, so you don't have to try to have a car, which then you got parking, you got time. I mean, there's traffic, gas, all that expense. When you can hop on a bike and you're there in 4 minutes or 5 minutes, or even walk. That makes a lot of sense.
So either in some cases, I guess there could be situations where you're literally getting some property from the university to build this. In other cases, you're just trying to build as close as you can.
Yeah.
I think historically those are the projects that have been successful, in addition to this amenity race that happens.
Got it.
That's kind of the major takeaways from the piece. People can kind of go to the site as well. We've got some quotes from a few experts and some additional numbers in there, but I think that's kind of good for that one.
All right, sounds good. What's the next article?
So next, I wanted to give an update on what's happening with some reforms from the Department of Housing and Urban and Development as it relates to specifically affordable seniors housing projects.
All right.
What's happened is that historically, affordable seniors housing projects have had some limitations on the kind of capital they can access, and that has particularly created some issues when some of these older properties are trying to redevelop if they don't have the same kind of access to financing sources, they have to rely strictly on income and any extra returns to sort of fund any improvements. So what's at play here is kind of opening things up so that seniors housing projects of a certain kind will now be able to use Section 8 much the same way that other affordable housing projects do.
Okay.
It's it's essentially just trying to help developers or owners of these kind of projects have a better ability to maintain them, update them, redevelop them, keep them in good shape for the residents.
Got it. Well, that's good then. I mean, that's anything that can help move that along, I think, is a positive, right?
I think so, and I think there was actually a question you even raised in the previous podcast. It's like how when we were talking about seniors housing, and specifically this question of on the affordable end, what sort of options were available, and I think this. It speaks to that now some property owners will have just an increasing menu of options, including so it's like the being able to use the Section 8 program is one thing that's being opened up. I think they're also going to be able to now tap into more kinds of low-income housing tax credit equity, which are some programs that are generally run at the state. There's some federal programs around that, and there's some also state-level programs. What some of these changes will do is allow the developers more access to those sources of capital as well.
Mm-hmm. Yeah, absolutely.
So, I mean, there's not like a whole lot to kind of, dive into, but beyond the headline of the piece, at least for podcast purposes. Mm-hmm. I think it is an important story. I think it is an attempt to alleviate an issue that's in the marketplace. I think it's going to be an important thing for some developers. But I think basically people want to get some more of the details, including links to the program. They can go to the website and check it out.
Got it. Yeah, I think that's a great idea because there is a lot more in here. I'm taking a look at it right now. So go check that article out, but we're going to move on. What are we going to next?
Almost somewhat related also about affordable housing, not about the seniors housing space. It's kind of, we did a little write-up based on the fact that recently Starwood Capital Group, a major private investor, bought 21 affordable housing properties in Florida and Texas with about 4,500 units. And overall, now they own almost 21,000 of these units across the country. I think it's notable just to see that an investor of that kind, it signals a couple of things, I think, that an investor of that size in attempts to find yield is not just, now this is like one way that they're actually buying in order to get higher yields. They're actually more aggressively investing in affordable housing projects. So I think that's that's part of the major takeaway. I think it speaks to the general issue that multifamily investors are having, which is which we've talked about, which is not necessarily a new thing, but just that yields are so competitive, multifamily properties are so popular that for investors to get the yields they want, they're having to be more creative.
All right. How creative?
So yeah, for one thing, yes, buying affordable housing is one way, since it's generally a higher risk property to operate, since there could be more volatility in leasing and and rental collecting rents and all that kind of stuff. So it's more risk but more reward. The other avenue besides buying affordable housing is just we're seeing generally more investments in multifamily properties outside of core markets. So in secondary and tertiary markets across the country, some of these investors who maybe traditionally wouldn't have looked there are now looking there to buy multifamily properties.
Right on. That's a good thing, I think.
Yeah, I mean, it's a good way, again, for, if they have certain yield expectations and they're not going to meet them, trying to bid on the same property that 25 other investors are trying to bid on in New York City, maybe, being more comfortable buying in a smaller market, if it's a good property, is a good thing. Or, looking at the opportunities to buy good affordable housing assets seems like a good thing too.
Yeah, no, that's true. Anything else we need to take away from this article specifically?
I think that's really kind of the main takeaway on this one. So there's, other than what I've done in the last two, which is point people back to the site. I think that's kind of the main takeaway that we have for that one.
All right, we're on to the last article, all about the single ladies.
Yes. So,
is it your turn to sing?
No.
Okay, just checking. All right. So this is interesting to me. Now break it down. What does it mean that this, they're a make or break demographic?
So this is all reporting that we did, starting with a report that was put out by Morgan Stanley. Essentially, it's called what they called the rise of the SHEconomy, and that they're basically starting with the premise that by 2030, 45% of prime working age women, almost 21 million of them, will be single, which is the largest ever share in history. So we're talking about, and based on U.S. Census Bureau data, the total number of U.S. single women in the U.S. will expand from about 67 million now to 77.5 million by 2030.
Wow, that's a huge increase.
Yeah. So I think it's partly, so it's identifying that based on demographic trends due to a number of factors, including women, not just women, but the people getting married later in life, higher divorce rates, and some other factors like that this is kind of a growing demographic. And so therefore, obviously, a growing demographic, the bigger the demographic is, the bigger influence it's going to have on retail.
Yeah, I think part of that's good. People waiting a little bit longer, women specifically getting engaged in their careers and wanting to do that before marriage and possibly children, because that's obviously a quick way to derail a career, having kids. But the sad part is, yeah, you're right. The divorce rate going up, that does create more single women and single men. But yeah, so I can see now why it's on the rise, because both of those things are on the rise. Wow. Okay.
Yeah, and then I think with that, right, all those things. So it's like, so then I guess, if you start with that, if that's your starting point, you just the realization that the number of single women is going to be higher. Yeah. Then what are some of the things that are connected with that? So yeah, especially if they don't have children, if they are advancing in careers or are having higher incomes, it just the way they spend money is also different, because if you're not spending on family, if you're not spending on husband, like that kind of stuff, your spending patterns are going to be different, and that's going to have implications, especially for certain retailers.
Yeah.
So this pointed out to, for example, single women outspend the average household in every category except, not surprisingly, men's and children's apparel. But for every other category, single women spend higher per capita than other demographic groups.
So let me ask you this, and I don't know if this is in the study or not, but did they take into account their shopping behaviors? Like, women tend to want to go out and shop. They tend to go out with other women to go shopping, and that's kind of a social thing for them, whereas men, in my experience, and also just kind of knowing what some of the data was years ago, we would much rather buy online, much rather not go out and have to walk around and get things locally or get things in a store. And we certainly don't call up our buddies usually and say, hey, do you want to go shopping? Unless it's for tools. But other than that, I mean, really, that's about it. Did they take that into account when they're talking about what kind of shopping they're doing? Because I know it just says retailers. It's going to impact retailers. But on previous podcasts, we've spoken about the box stores, or we've spoken about brick and mortar compared to online. Is that covered in here at all?
I don't think it. I think yes and no. I think it doesn't speak to as the social behavior of shopping, and whether it affects that aspect of it. But it does speak to that certain categories are more likely to benefit just based on on the kind of spending that single women do that's different than mothers or married women or other categories of women. So particularly it pointed to activewear, off-price retailers as being best positioned to benefit from this. So that includes companies like Nike, Raw Stores, TGX, and Lululemon, which we
yes.
You remember from a couple of weeks ago.
Yes, I do. We won't talk about that.
But I mean, particularly the activewear, the reason that activewear retailers may benefit is that according to the report, single women work out 1.5 more hours per week than married women.
Okay, I could see that too. I mean, depending on what your responsibilities are, you may have a little bit more free time to do that.
Yeah, this is also true for single men. So basically, single people in general work out more than married people.
I agree with that 100% because I'm a married people, and I definitely am hours behind single people when it comes to how much per week I'm working out.
Yeah. So, I think so. I guess it's just an interesting study because it takes facts like that and then gives us the implications based on this is a growing demographic. So, I think. So the activewear benefit, the study also pointed out that women make up to 60% of Ross and TGX companies, shoppers, and single women are generally more willing to spend on apparel and shoes and than married women.
Yeah, I mean, I would think so just because of the fact that married women are part of a household. Right, that they contribute to bills. I mean, not that single women don't have a household because they have their own, but there are so many other factors when you include a husband or possibly children as well. That makes perfect sense. And I'm assuming they go out more, probably both single men and women. But since the study is mainly about single women, I would say they go out maybe to eat, to entertainment type of things more than married women. Do you think?
Yeah, that was also touched on. That's true. Yes, and so there's some restaurant chains, particularly fast casual chains, that they think stand to benefit. Mm-hmm. Also, Starbucks is apparently very well positioned. So just having more income to devote to that kind of to eating out, to going out is going to benefit the kinds of these kind of chains.
Yeah, the Starbucks thing kind of surprises me because, I'm thinking if you've got kids, you don't get a lot of sleep, and so you need more coffee. But that's just my own perception. Maybe I'm completely wrong on that, but that's what I would need. I think they keep you up at night.
Yeah, I think that's universal.
Yeah, absolutely.
Even with the lack of sleep.
True. But, yeah. Is there anything else in this article, David, that we need to cover? I mean, it's really robust. I mean, there's a ton of great information in here. Anything else we need to touch on, or are we going to point people back to the website on this one as well? Yeah,
I think, again, there is more. We talked to several experts, I think, rather than reading out some of their quotes, but we talked to retail brokers, a couple consultants in the space, just to kind of verify whether, what they think, what they thought of the report and if they had similar observations. So I think there's a lot of good commentary that people may want to check out that goes in the piece itself.
Yeah, definitely. So get to the website, check it out. And while you're checking that out, David's got a little list here of other headlines that we did not cover today in the podcast, but you will find on the site. David?
Right. So a couple other pieces from this week. We had an update on office development and how rising construction costs are starting to have an influence on how much is being done. I looked at an analysis of the self-storage REIT space and the potential for acquisitions there. I had a report from another retail report that looked at how the number of store closings could reach a record high by the end of the year. And then we had another piece of our research as well that I didn't want to devote a whole other podcast to, but that's on our website that's looking at the trends in financing in the industry. So people can just go and check out the full report on the website.
Fantastic. All right, David, another great podcast. And it's, the common area. That's where people gather to talk. And so get to the website, check it out, check out all those other articles. And if they have any questions, concerns, comments, feedback, where can they reach you, David?
They can reach me at david.bodamer@informa.com, or I am on Twitter if you just search for David Bodamer.
There you go. Do some tweeting. All right. Thanks, David, for your time. This is a great podcast.
All right, thanks for your time.
You bet. And thank you all for listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with all your colleagues. Thanks so much for listening today. For everyone at NREI, this is Aric Johnson inviting you back next week for all the news that matters to you. And we'll talk to you soon.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of NREI or Informa. The content has been made available for information and educational purposes only.